And to the local market now, and plenty to talk about. I spoke earlier to Marcus Padley from Patersons Securities. Marcus Padley, another rather anemic session. Is it Europe, I assume, keeping equity investors parked on the sidelines?
It certainly is. The volumes are quite low. They've been low all year. January is usually a low volume, but there's just nothing that's kicked it back into life. And the market is focusing on risk. People have basically got fed up of losing money, and a lot of investors, as we know, have hit the sidelines with all the interest in term deposits and whatnot. And they are not going to come back in until the big risk issue, which at the moment is Europe, is decided.
Well, to stocks, and we've looked at the Woolworths decision to sell the Dick Smith business. What's your assessment, and how did it play out in the retail sector?
It's some of the best news that an electrical retailer could hear, because there are close to 400 Dick Smith stores. They're going to be closing 100 of them over the next couple of years, and and selling the rest to somebody else who almost certainly isn't going to have the balance sheet of Woolworths. And probably the first thing they'll do is close another 100 stores as well, as they get the business into shape. It's a clear sign that consumer electronics is a no-growth sector, and in one fell swoop they're effectively taking, as one broker guesses, 300 to 400 million of sales away from but giving them back to their competitors. So Harvey Norman and JB Hi-Fi both jumped 5% early on. Harvey Norman ended up sort of flat. David Jones even went up as well. It's been viewed very positively by the sector. We'll see what sort of research upgrades, recommendation upgrades and valuation upgrades we get tomorrow. Now,
Australian agricultural company Aaco has, shall we say, beefed up its full-year earnings, reporting a $14 million profit. How have investors responded there? Because there were all those dramas of live exports last year, weren't there?
Yeah, look, this is not a sexy stock. It's a one-product company, and the price is priced in a commodity market, so it's fraught with risk. The stock is down 61% since the top of the market, against a market that's down 37%, so it's underperformed fairly wildly. But they are in a bit of a sweet spot, as these results say. They've seen sales up 32%, production of beef up 26%, and they describe themselves as being in an extremely positive pricing environment. But that's all sort of short term, and the risks remain. The stock's been flat for a while.
And to a more sexy industry, I see Origin Energy has issued its latest production numbers.
Yes, they have seen sales up 5% overall, but gas sales down 9% as they've sold off a few of their interests. Gas production down 4%. Didn't impress the market particularly. Again, but this is quite a good performer in the current market. It's been going sideways in quite a narrow trading band for quite a long time. People sort of trade the band. It's towards the bottom end of the band at the moment. These numbers are pretty solid. Takes a bit of risk out of the stock. Not bad, but short term, not doing anything for them.
Yeah, and we've got a very busy week, both of us, next week. Marcus Padley, thank you very much for joining us.
My pleasure, Tiki.